OpenAI is pumping the brakes on its long-anticipated Wall Street debut, and the reasons why tell us a lot about the current state of the AI industry. According to 3 people involved in the company's deliberations, OpenAI is now leaning toward holding off its initial public offering until next year. That's a notable shift for a company that, not long ago, had already hired bankers and lawyers with an eye toward going public as soon as the 3rd or 4th quarter of this year. CEO Sam Altman had reportedly pushed those advisors hard to find a way to get the company valued at $1 trillion, up from its last private valuation of $730 billion. So what changed? A few things, and they all hit at once. The biggest warning sign came from SpaceX. Elon Musk's rocket company went public this month in what became the largest IPO ever, raising more than $85 billion and reaching a valuation of $1.77 trillion on its debut. Impressive numbers, but since then, SpaceX's stock has slid from a high of $202 per share down to $153 by the end of trading on Thursday. For OpenAI's advisors watching that happen in real time, it was a sobering signal. If SpaceX couldn't hold its opening day momentum, retail investors might not be lining up for OpenAI either. Add to that some broader market turbulence. Tech stocks have been dragging down indexes in recent weeks as investors grow more skeptical about whether AI companies can actually live up to their sky-high valuations. That's a tough environment to debut in, especially for a company that, despite reporting roughly $13 billion in revenue in 2025 and generating $2 billion a month right now, has not turned a profit and is aggressively spending on data centers and computing power. OpenAI's advisors reportedly gave the company 2 options: wait until 2027 and aim for the trillion-dollar valuation, or lower the target and move faster. Altman's reported response? A lower valuation was a non-starter. So waiting it is, at least for now. The delay could disappoint a lot of people. Wall Street and Silicon Valley have been eagerly anticipating public offerings from both OpenAI and its rival Anthropic, seeing them as potential catalysts for a wave of generational wealth. OpenAI did file confidential paperwork with securities regulators earlier this month to begin the process, but the company never publicly committed to a specific timeline. Beyond the IPO question, OpenAI is dealing with a range of other pressures. ChatGPT's user growth has stalled around 900 million users, surprising investors who expected the company to easily clear 1 billion. Competitors like Anthropic, with its Claude coding tool, have found success selling to businesses. And Google's Gemini has gained real traction with consumers. In response, OpenAI has been restructuring. Under a new executive overseeing deployment, the company has started cutting what it internally calls side quests, non-essential, money-losing projects, and is building out a sales team to push its coding product, Codex, to large business customers. More than 5 million people use Codex weekly. The company also recently landed a major hire, Noam Shazir, one of the original authors of the 2017 paper that introduced the transformer architecture, the literal T in ChatGPT, poached away from Google. Despite the IPO uncertainty, OpenAI executives say internally that the company is moving in the right direction. Whether Wall Street will agree, and when, remains to be seen. That's the story. OpenAI, the most talked about company in tech, is choosing patience over pressure, at least for now.